Good evening. The Securities and Exchange Board of India Amendment Bill 2013 was introduced in Parliament today. The bill seeks to amend the SEBI Act to replace the recent ordinance to widen existing norms related to selection of the presiding officer of the Securities Appellate Tribunal, or SAT. Now, SAT is a statutory body set up to hear appeals against orders passed by SEBI. The SEBI Amendment Ordinance 2013 was promulgated on January the 21st in the wake of difficulty in filling up vacant posts of presiding officer in the SAT. The eligibility criteria for selection of a person for the post of presiding officer has been enlarged through the ordinance, as there was an urgent need to fill up a vacant post of presiding officer. The post, that particular post of presiding officer of the SAT has been lying vacant since November 29th, 2011 due to the non-availability of a suitable candidate. Now, the absence of the presiding officer has been hampering in the functioning of SAT. And since we are talking about SEBI, I want to expand the discussion further and not just talk about the SEBI bill, but the future of SEBI as well. Plans to restructure the capital markets regulator are likely to take a concrete shape at a meeting this week in the Finance Ministry. The Finance Minister met management consultant Oliver Wyman, a consultancy appointed by SEBI, for redesigning its functions, structure and vision. This is the first time that the regulator in India has opened itself up to performance reviews by an outside agency. Ladies and gentlemen, tonight on The Big Picture, we talk about the SEBI bill and the future role that the capital markets watchdog will play. And on the panel tonight is Jagannadham Thunuguntla, Equity Head, SMC Capital, Professor Pinaki Chakraborty from the NIPFP, and Priyaranjan, Managing Editor of the Financial Chronicle. Welcome all to The Big Picture. I'd like to start with Jagan, if I could. This bill, people say, couldn't have come at a better time. The post of SAT chief has been vacant for a while, since November 26th, actually. And the ordinance that was brought in to widen the scope will be finalized as and when the House passes the bill. Now, SAT needs someone at the helm, and quick.
Absolutely, because there are lots of litigation issues and there are lots of appeals that keep going around, because justice delayed is justice denied. So in that sense, we need, and I think we need not only a replacement after a while, because we should have pre-planned structure wherein whenever there is a vacancy about to come, there should be an organized immediately approach. Yeah. Not even immediately, the global is trended at least 2-3 months before, so that there will be a parallel structure so that the new guy will get the opportunity to understand the whole thing. I think that will elevate the credibility of the whole overall regulatory system. Okay. And moreover, even the whole new regulatory structure that is being planned, that is very much required. Just a small example, there was a time when insider trading used to get about, say, 1 crore rupee penalty. Those days, 1 crore rupee penalty used to appear like phenomenally big amount.
Huge
now even a normal middle-class person will buy about 2 crore rupees worth of apartment. So meaning thereby the 1 crore rupee technically lost its relevance. I think the time has come to take it seriously.
Absolutely. Do you agree, Professor Pinaki Chakraborty, that the procedure, whenever a vacant post is there should be someone there 2 months before the previous person is retired?
Yeah, ideally it should be. Ideally it should be, but most of the time it doesn't happen. And it is not that government or an institution is really not keen on doing that. Many times we really do not get good people to replace somebody. So that problem is always there. It's not only for SEBI, but I think it's there in all the institutions. So in that context, I would definitely say that this is an ideal situation, but in reality probably it doesn't happen. But this decision with regard to the appointment of SAT tribunal head, I think it is a very important decision for an important institution like the Appellate Tribunal. And also I feel that it is very important that if the head decides a lot of things, so to give credibility to the institution, it is very important that
the right person
is there in place.
Absolutely. I want to expand the discussion further. Like I said, I want to come to Mr. Dash now. The Finance Minister seems to be very keen on expediting the process of a so-called SEBI revamp. Now, the SEBI board met him, P. Chidambaram, last week and made a presentation about what they see as their future agenda. Very high on the agenda, top of the agenda, of course, is a more simplified set of KYC norms that Mr. UK Sinha also talked about in a previous interview as well for foreign investors. And how helpful is that going to be? A more simplified set of KYC reforms that is sure to stir investor interest. Now, nobody really wants red tape, do they?
We should actually, SEBI is the first regulator that we've had.
After we liberalized?
Yes. Yeah. It's been 25 years since SEBI was set up. In '88 through an executive order, and in 1991 through an ordinance, it got statutory powers, and the SEBI Act came in 1992. So after that, we've had several sectoral regulators, not only in the financial sector, but in other sectors. And every time one talked of a regulator, one talked about SEBI-like regulator.
Absolutely.
So SEBI, in a sense, has been a model for 25 years. And it's been the sort of lodestar, I would say, in the country moving away from the regime of controls. You know, in case of SEBI, I still remember there were days when you had a guy in finance ministry called controller of capital issues.
Right.
Now, one found so many entrepreneurs hanging around in the corridor for hours waiting for His Highness the CCI to be kind and give them an audience and he would be a director level and sometime a deputy director level official. So that was the case, but the capital market has developed along with, we've had, you know, SEBI has had in 25 years its highs and lows, but overall, SEBI has been one regulator compared to the other regulators which have come into being. SEBI has been one regulator which has overall had a fairly good role to play.
Right.
So our capital market has been fairly well regulated compared to even some of the advanced countries.
You mentioned, sir, times are changing, capital markets have evolved. Now,
so it's a good idea that with 25 years of operation as the background, one looks at the future role of SEBI and looks at a vision. So it's a good attempt at doing this.
So SEBI is also changing with the times. SEBI has come up with an announcement saying that we'll open more countrywide offices. That's a step in the right direction, isn't it?
That is absolutely required, and it is, you know, because our markets are getting increasingly globally integrated. So investors are both not only at home, they are abroad, and the markets linkages are increasing with every passing year. So we've had 25 years of a capital market, liberalized capital market, and the markets are, you know, we feel the impact of the global market on a minute-to-minute basis.
Right. I want to come to Jagan first, and then I want to very quickly go to Professor Pinaki. SEBI has also hired an external consultant, like I said, Oliver Wyman, to reassess its role with regards to capital markets and investments. Thoughts on that? They could perhaps help in identifying possible triggers that for change, market scenarios, etc., etc.
I completely agree with Mr. Das. I think just one point is that earlier even the name, it was a controller of capital issues. The whole orientation is towards controlling the system. Whereas SEBI, if you see its vision statement, it says that it's a regulator and a growth enabler. In the sense, the basic idea is to grow the capital market and to regulate.
It's a facilitator, not a controller.
It's not a question of a controller. I think that itself makes a hell loads of difference in the thing. The second point is about opening the new offices. Earlier, the approach was the SEBI has sort of delegated its responsibility to regulate capital markets to stock exchanges, because SEBI cannot go and check with every broker and the sub-broker. What they did is the NSE and BSE have to act as a semi-regulator, so that day-to-day basis they will be keep checking. But now the SEBI has realized that the complexity of the game has increased to a level. They have to go nooks and corners. On top of that, IPO distribution gets into very, very rural places. People from rural places put their IPO applications, say mutual funds applications. So you need a seriousness, because otherwise you keep talking about increasing the penetration in India, but it eventually never happens. Because just a simple statistic, in a country of 120 crore population, the total demat accounts we have is 1.8 crores. That is, the total penetration is 1.5%. It's just pathetic, even if I can use that word.
Absolutely.
I think the new design or the consultant who is coming in has to just think about increasing the very base of the demat accounts. Then we can probably think about how to get them into the game and how to create this wealth distribution, because in a country like India, not just wealth creation, the wealth distribution is highly dependent on the number of demat accounts that we have.
I want to get Professor Pinaki Chakraborty's views on the external consultant, but sir, we have to take a small break. I'll come back straight to you. Don't go anywhere. Lots more to come on The Big Picture on the other side of this break. Welcome back to The Big Picture. We're discussing the future role of SEBI. Remember, the SEBI amendment bill was introduced in the Parliament today. It follow-up to an ordinance that, in fact, enlarged and widened the scope of how they choose the chief of the Securities Appellate Tribunal, or SAT. But right now, we're talking about the future of the capital markets watchdog. Professor Pinaki Chakraborty from the NIPFP is with us. Sir, the consultant, Oliver Wyman, that they've consulted, they say will also try and envisage the role of the market regulator in the next 5 to 10 years. Now, I want to do a quick dipstick survey in the Rajya Sabha TV studio right now. Starting with you, sir, where do you see SEBI, along with the evolution of the market and the regulator itself, in the next 5 to 10 years? Or where would you like to see SEBI in 5 to 10 years?
Well, as it is very important to understand that one requires to evaluate oneself. So that way, somebody external coming and evaluating the functioning of a regulator is good. And as Mr. Das was talking about in the beginning, I think it is very important to appreciate the fact that SEBI has always been recognized as a good regulator compared to other regulatory environment that we have. Our regulatory environment is also very constrained. So in such a situation, I think it is very important to appreciate the role of SEBI, but the SEBI's role is going to change. There are a couple of things. One is what we have inherited. What we have inherited is a very complex company and commercial laws, which has its own implication in terms of the development of the capital market. True. Second point is the economy is going to get more globally integrated, and also economy is going to get more formal. We are talking about financial inclusion. So what is the nature of financial inclusion? People opening a post office savings bank account or people opening a savings bank account in a commercial bank, we call it financial inclusion. Of course, it is a first step, but I think financial savings has to improve because that will diversify options for growth. It will finance growth. So, and if that happens, I think we need to develop capital market. But we have to be extremely careful of the fact that if you want to bring in people to the capital market, people, middle class, poor people always look for safer investment. So if you want to really bring them to the capital market and make them take risk investing in capital market, you have to make the regulator a very, very credible one. So that is where the role of SEBI lies. I think SEBI has crossed that path very successfully for the last 25 years. I think in the next few years, SEBI has to face two challenges. One is improve its credibility further. Absolutely. And second, ensure that people are able to choose between different diversified financial instruments. I would agree that increase the penetration of demat, which hasn't happened. So if all those issues will have to come in, and SEBI has to stand up to that.
Absolutely. Do you agree SEBI has to make sure that people have the options and they have to make sure the credibility is untouchable?
Well, in terms of the market participation, like Jagan was mentioning, it's really very low. And the reason, like Dr. Chakraborty mentioned, is because we've had, in this 25 years history of SEBI, we've had regulatory failures on a large scale, and those regulatory failures particularly have hit the small and retail investors. Small and retail investors, with the scams that we have had, starting with Harshant Mehta, at that time SEBI did not have statutory powers when the scam happened. But starting with Harshant Mehta scam to the Ketan Parekh scam, to you take it even to the recent mid-cap crash, scam. Yes. Every time the hardest hit has been the retail and small investor. People have come into the market, burnt their fingers, and are now chary of, it is many investors have thought, because of the price manipulation that has happened, because of the scams that some operators have done, and there have been regulatory failures. Now, if you look at it, we've had corporate frauds. Now, the biggest of it we know was the Satyam.
So Satyam, the Citibank.
Now it's been more than 3 years. Now SEBI is supposed to have taken some action there. That was the largest corporate fraud in the history. Now the investors do not know. There is a CBI case. CBI is investigating, etc. That is happening. But what action did SEBI take? So SEBI has a lot to learn from its own regulatory experience of the last 25 years.
And they have to keep evolving.
To instill confidence in the retail and small investors in particular. Number one. Number two is insider trading, I would say. Insider trading, insider trading is not something that is easy to figure out and then prosecute. Yeah. But it has happened. We've had recently the case in US where insider trading has been successfully prosecuted. Now, in our markets, we have not had so far a single case.
No, I take your point, sir. I take your point. I think Jagan was there when he did the show on insider trading as well.
So there is a shadow of insider trading over our market, and the regulator seems to have had no answer.
And it's the regulator's job to instill confidence after such a thing happens. Jagan, I want to come to you. I want to talk about market manipulation as well, but that's a little later in the show. First of all, I want to see a reaction from you on the same thing. Markets are changing rapidly. Times have changed. Fraud is quite rampant, if I could say that. Technological challenges are many in front of SEBI right now. Do you think SEBI is geared for it?
Yeah, one more area where retailers have been hit hard was the regional stock exchanges, and and it became dysfunctional because every regional stock exchange has about 1,000 shares, and then now virtually everything disappeared. So many retailers feel that where those companies have gone, what happened to that money? So that has hit the besides the scams, that is one more thing. And then one more thing is the technology now has increased to a level where every day the total volume, trading volume in India is 2 lakh crores. Sometimes that's a blessing, because when the game has reached that level and everything is dematted, because India is the most highly dematted and everything is technology oriented, because even US markets are 50-50%, because sometimes it helps a big time because everything is transparent in that sense. But having said that, still out of that 2 lakh crores, about 95% will be in large hands. I think the smaller guy will always be at the risk of the bigger guys. It's the question of haves and have-nots clearly gets visible and clearly gets rewarded and punished in the capital markets.
Absolutely.
There are many things that need to be gone into, and technology-wise, India is on par with any other market in the world, because NSE's technology is easily by far the best in the world. There is no problem as far as technology orientation is concerned. Just that building that confidence and then making sure that have-nots will not get punished. I think that is one more area.
I want to take another break right here. When I come back, I want to talk about market manipulations and what action really SEBI has taken against them. Has that been harsh enough? And also the future and regulatory, let's say, cooperation between different regulators. More to come on The Big Picture on the other side of this break. Stay tuned. Welcome back to The Big Picture. We're still discussing the future that SEBI might envisage for itself. Remember, they've hired an external consultant, Oliver Wyman of the US, and they've tried, this is the first time any regulatory body in India has opened itself up to a review, a performance review by an external agency. Now, sir, before the break, I was talking about market manipulation. Let me come to you, Professor, first. There have been quite a few instances in the past of market manipulation. Some were detected, some weren't really. There was a crash in the mid-cap stocks recently. Now, SEBI says the investigations are on, but the evidence is not conclusive enough for SEBI to take any action. Now, according to you, has SEBI really cracked down hard enough on attempts of market manipulations? They did catch some people, they did impose some fines, but has that been harsh enough?
Well, here you have to look at the larger picture, and the big picture here is that even if SEBI does, given the fact that financial offenses and crimes, when it comes to the court, and the general issue of long delay in justice actually creates a huge problem. So here the question is whether SEBI can really play an effective role in the given constraints that are there in the judicial system, long process of justice, and also the overall macroeconomic environment, complex laws of company laws and other laws, which can really manipulate system to a great extent. I would definitely say that SEBI, even though it has tried its best, probably it does not instill that level of confidence in the mind of a retail investor who has very hard-earned money to put into the capital market to ensure that, well, it has happened in the past, it is not going to happen next. Now, the point which Jagan was saying, that it is actually a market of haves and have-nots, so either 95%. So it is also very difficult for SEBI, given this kind of a skewed distribution of wealth in the capital market,
to actually crack down on everyone.
Actually crack down on that. So you have to work on two fronts. One is you make this distribution of wealth more equitable by bringing in more and more retail investor into the capital market, and also ensure that these guys do not take the poor fellows for a ride. So that is where SEBI has to come in and instill confidence, and definitely the past, even if we look at, because of SEBI's own issues and the issues that are involved for prosecution, which happens in US within 2-3 years, it doesn't happen in India. So in the process, people really are not confident of putting their money into the capital market.
Jagat, there were two instances, I think. Recently, two separate individuals were charged. One was fined 1 crore, the other one was fined 72 lakhs. I think Dhaval Mehta, the IDFC mid-cap scam as well. Do you think that those two instances are like good examples?
That is where the point I was making. The amounts are not
really important
sufficiently
right now.
because in a game where every day there is a trading volume of 2 lakh crores, a penalty of 2 lakh rupees
is nothing.
I think who cares? I think many large HNIs pay that much brokerage on a daily basis, leave alone penalty. And secondly, I think somehow India couldn't able to take advantage of the mobile penetration in translating into demat accounts. I always say we have about 100 crore mobile connections. Give a free demat account to everyone, whoever has a address proof, and because at least the postpaid connections, because prepaid connections you don't have the address proof, but postpaid connections give a free demat account. Let there be 100, 200 rupees a chance, so that at least the game has increased. Then the wealth distribution that Mr. Pinaki was talking about, that will naturally get translated. It may take time. At least the first step is being established. In just imagine 120 crore population, 100 crore demat accounts, just a perfect scenario. When there is mobile account postpaid connection, what's stopping them translating it to a demat account?
Absolutely. You have a point. Then I'll go to Mr. Dash.
Yeah. There is no point having a dormant demat account. I think it is very important that those demat accounts are active.
They should be functional.
As though it should be functional. So that's
absolutely. What I want to talk about now, and I'll put the question to all of you. I have about 5 minutes left, and I want to squeeze all of you in that. Now, we were talking about the lack of clarity on regulatory roles and the coordination between different regulators. Now, that seems to be a persistent problem with Indian regulators. The banking regulator does not really agree with the insurance regulator. The insurance regulator doesn't really agree with capital markets regulator. Now, would you say it's a correct assessment if I said that is the biggest problem facing the financial sector right now? The lack of regulatory coordination.
Especially since the operators are increasingly financial conglomerates. Now, when they are financial conglomerates, they are acting across sectors. So, when you have sectoral regulators and they do not see eye to eye, then it becomes a very difficult thing. Fortunately, they have reached an agreement. All the, in the financial sector, all the 5 regulators have an agreement to coordinate it, and the last week only. So that's a good, it augurs well. Having said that, you see, one must realize that when you shift from a control regime to a regulatory regime, now a control regime comes in and controls. A regulatory regime makes rules upfront, lets the player play according to the rules. So SEBI would have basically 2 functions. Not only should the regulations be good, but there is no point regulation being good if the enforcement, if somebody is violating those rules, the SEBI is not able to catch the violators and then proceed against them. There will be no point in setting very good rules. So the rules have to be good, and the implementation, where SEBI's problem has been that it's not been able to implement, even if it is a 1 lakh fine or a 2 lakh fine, we have very less number of cases where such offences are detected, and so that people in general have greater confidence in the regulation being effective.
Professor Pinaki Chakraborty, your thoughts on the lack of regulatory coordination between different regulators?
See, all the financial regulator has to converge on certain broad parameters. There can be complex issues with regard to specific sectors, but I think convergence is very important to give a clear signal to the market participants that this is the way we want to go about it. So if they talk in different voice, that will actually create problem for the whole capital market. So that part is absolutely important. But that is not there. KYC norm, I think, is one of the beginnings. So they have a common portal where you will do everybody has a common system. So and also one has to understand the fact that I think we are asking too much in too short a time, because we have come from a very controlled regime to a regulatory regime which had I'm not complacent about it, but I'm thinking that I'm optimistic that the things will move forward and regulatory environment will improve further in India, so that this kind of issues like insider tradings and doesn't exist or come down drastically, so that the market gets developed and people come into the market.
Wrap this up for us, Jagan, your thoughts?
Yeah, so under Justice Krishna Commission, they have started this Financial Sector Development Commission, which will come under FSLRC. Even the budget has a reference to it, and they will be filing their report in March. That is 1 month. So it is looking at the entire financial architecture. I had an opportunity to represent ASSOCHAM in the committee. So the basic idea is to not just SEBI, put in in everything, and moreover think about a super regulator concept to talk about all these overlaps and get a system. How far people will agree or not, that's all a different matter, but at least already the homework and the background work has started, and hopefully the March results will be good. Even Chidambaram mentioned that they will move very fast on that.
Are you in favor of a super regulator?
I think sort of. I think in a normal course the current system is okay, but for maybe special rare cases, maybe one regulator not a bad idea.
One word answer, sir. Super regulator, yes or no?
No, I won't like
and
that.
You, sir?
No, I don't think it's practical.
All right, it's 2-1 on the super regulator right now. That's the time, all the time we have on the big picture right now. Of course, SEBI has a long way to go. It has come a long way. One of the most credible regulators that we have in India, the capital markets watchdog, still a long way to go. They're technologically equipped, says Jagannadham Thunuguntla, but they have more challenges, said Professor Pinaki, Chakraborty and Mr. Dash. Thank you so much, all three of you, for joining me on the big picture. This is all the time we have. Athar Khan saying goodbye, good night, and thank you for watching.